COVID-19 was more than just a health crisis. It was an economic earthquake that shook the global financial markets. In a matter of weeks, stock markets plummeted, businesses shuttered, and governments scrambled to inject stimulus packages to prevent economic collapse. But how exactly did the pandemic impact the financial world? What assumptions did investors make, and how did they navigate one of the most unpredictable market crashes in history? Let's break down the story of COVID-19's financial impact, the roller coaster ride of market reactions, and the valuable lessons investors learned from it. Number 1. The initial shock, a market in free fall. When COVID-19 hit, the markets didn't just react, they panicked. Stock market crash of March 2020. In early 2020, as the virus spread beyond China, global markets crashed at unprecedented speeds. The S&P 500 dropped 34% in just a month, marking one of the fastest market crashes in history. The Dow Jones suffered its worst single-day drop, falling nearly 3,000 points on March 16, 2020. Number 2. The unexpected recovery, a stock market miracle. If you thought the market would stay down forever, you underestimated its resilience. The rise of the stay-at-home economy. While traditional sectors like airlines, hospitality, and retail suffered, tech stocks boomed. Companies like Amazon, Zoom, and Netflix saw their stock prices soar as people adapted to remote work and entertainment. The Nasdaq hit record highs by mid-2020, fueled by the assumption that digital businesses would dominate the new economy. Vaccine breakthroughs, the market's turning point. When Pfizer and Moderna announced successful vaccine trials in late 2020, markets surged. Investors assumed that life and business would return to normal, leading to a rotation out of tech stocks and into sectors like travel and energy. Number 3. The sectoral impact, winners versus losers. Not all industries suffered. Some thrived like never before. Winners were Apple, Microsoft, and Google reached all-time highs as digital transformation accelerated. Amazon and Shopify saw explosive growth due to online shopping surges. Companies involved in vaccine development and medical supplies profited heavily. Bitcoin and Ethereum skyrocketed as investors looked for alternative assets. Where the losers were, airlines and tourism, travel restrictions caused massive losses for airlines, hotels, and cruise lines. Oil and energy. The price of oil briefly turned negative in April 2020 as demand collapsed. Retail and hospitality. Small businesses closed, and major retailers filed for bankruptcy. 5th, lessons from COVID-19. What investors learned. Want to be ready for the next crisis? Learn from this one. Number 1. Markets can recover faster than expected. Panic-driven selling often leads to missed opportunities. Number 2. Diversification is key. Relying on one sector, like oil or travel, proved disastrous for many investors. Number 3. Government policies shape markets. Stimulus checks and interest rate changes influenced investor behavior. Number 4. Innovation drives growth. Companies that adapted quickly thrived, while those resistant to change struggled. Number 5. Inflation matters. Printing money can stimulate growth, but it comes with long-term risks. COVID-19 was a wake-up call, reminding investors that crises create both challenges and opportunities. The next market shakeup will come. It's just a matter of when. The question is, will you be ready? If you found this breakdown useful, hit like, subscribe, and turn on notifications. More financial deep dives are on the way.